Tesla's future is moving forward, but Wall Street is asking one hard question: how expensive will that future be? Hi everyone, this is Ken. This week was important for Tesla. Tesla beat expectations. FSD moved forward. Robotaxi expanded. Optimus became more serious. And in Europe, Model Y showed signs of recovery, but Tesla stock still felt heavy. Why? Because the market is not rejecting Tesla's future. It is trying to calculate the cost of building that future. So today, let's break down what really matters for Tesla owners, fans, and long-term TSLA investors. First, Tesla is no longer judged only as an EV company. It is being judged as an EV company, an AI company, a robotics company, an autonomous driving platform, and an energy company. That is exciting, but it also makes Tesla harder to value. The market is asking, can FSD become a real software business? Can Robotaxi become a real network business? Can Optimus become a real robotics business? And can all of this become profitable before the investment cost becomes too heavy? That is the real debate right now. Earlier this week, Tesla stock rebounded from the mid $350 range and got close to $400. So some investors may have thought the bottom was already in, but I think we still needed to be careful. A strong rebound does not always mean a confirmed uptrend. The stock was still near important technical levels and the market had not fully changed its mind, so the rebound showed interest, but it did not remove the uncertainty. Then came Q1 earnings. Tesla delivered better than expected results. Revenue was around $22.39 billion. Non-GAAP EPS was 41 cents. Gross margin improved to 21.1%, and free cash flow was positive. So the numbers gave investors some relief. But the real story was not only the earnings beat. The real question was whether Tesla's future businesses are becoming real enough to support the long-term valuation. That is why Robotaxi, FSD, and Optimus mattered so much this week. Let's start with Robotaxi. Tesla said paid Robotaxi miles nearly doubled quarter over quarter. The word paid is important. This is not just a private demo. It suggests Tesla is slowly moving toward commercial validation. Tesla is also expanding beyond Austin, with Dallas and Houston now part of the story, and more cities being prepared. On top of that, Robotaxi-specific supercharger planning is starting to appear. That matters because Robotaxi is not just about self-driving software. It is about building an operating network. Charging, routing, fleet management, safety, maintenance, and utilization all matter. So Robotaxi is moving from concept toward early operations, but investors still need proof at scale. Next is FSD. Tesla indicated that FSD V15 will be a major update, especially for AI4 vehicles. This suggests that the most advanced path toward unsupervised FSD is increasingly connected to AI4. At the same time, Tesla admitted that HW3 may face limits for unsupervised FSD. For some owners, that is frustrating, but for investors, it gives more clarity. Tesla appears to be drawing a line between the older FSD path and the next generation autonomy platform. So the key question is not only how many Teslas are on the road, it is how many of those vehicles can participate in the highest value autonomy future. Now, Optimus. For a long time, Optimus was mostly about demos and future vision. But this week, Tesla talked more about production preparation, including factory and production line planning. That is an important shift. A robot demo is exciting, but a real robotics business needs manufacturing, cost reduction, reliability, safety, and useful deployment. So, the next big Optimus catalyst may not be another flashy demo. It may be proof that Tesla can build the robot repeatedly and efficiently. Now the big question, if All of this sounds positive. Why did Tesla's stock still feel heavy? Because Wall Street is watching the cost. Tesla's future requires massive investment, AI training, custom chips, FSD development, Robotaxi operations, factory conversions, Optimus production, battery capacity, and regulatory work. All of this costs money, and in the short term, it can pressure margins, profits, and cash flow. So the market is not saying Tesla has no future. It is saying, show us that this future can become profitable. That is the key difference. There was also an important owner perspective this week. The Cybertruck PCS issue matters because it affects home AC charging. That impacts daily usability and owner confidence. Tesla can offer temporary solutions like free supercharging, but reliability still matters. At the same time, Tesla is improving supercharger congestion prediction with machine learning. This may sound small, but it improves route planning and the ownership experience. And this is one of Tesla's hidden strengths. Tesla does not only build cars, it improves the entire system around the car. The vehicle, software, charging network, data, and AI models all connect together. That is difficult for competitors to copy quickly. Europe was another important signal. Model Y returned to the top of the European sales rankings in March. That suggests Tesla demand in Europe is not dead. But investors should not look only at unit sales. The real question is whether Tesla can recover demand while protecting margins. If sales only improve because of heavy discounts, that is not as strong as it looks. But if Tesla can maintain demand and profitability, that becomes much more meaningful. So Europe is encouraging, but margins still matter. So here is my conclusion. Tesla is not stuck. Tesla is transitioning. Q1 numbers gave investors some relief. Robotaxi moved closer to operations. FSD became more clearly tied to AI4. Optimus moved toward production planning, and Model Y showed recovery signs in Europe. But the market is still watching costs, margins, competition, hardware limitations, and the timeline to real profits. That is why Tesla's future can be moving forward while the stock still feels heavy. For long-term investors, this is where discipline matters. Do not become blindly bullish just because the future sounds exciting. And do not become blindly bearish just because the stock does not react immediately. Track execution. Are paid Robotaxi miles growing? Is FSD improving on AI4? Is Optimus moving from prototype to production? Are margins holding up? Is demand recovering without aggressive discounts? And is Tesla turning heavy investment into future cash flow? That is the real checklist. Tesla's future is still moving forward. But from here, the market will reward proof, not just promises. What do you think was the most important Tesla signal this week? Q1 earnings, Robotaxi, FSD V15 and AI4, Optimus, or Wall Street's concern about investment costs? Let me know in the comments. That's all for today. If this video helped you understand Tesla from a deeper investor perspective, please hit the like button. And if you want more Tesla, AI, Robotaxi, Optimus, and TSLA stock analysis, make sure to subscribe to Life in the Future. Thanks for watching. Let's keep following the future together. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.